to the Trading Bells show. I'm your host, Maina Chege, and today we have had the results announcements by NCBA Bank Q3, the first in the world digital lender. And here with me is a CEO to help us understand what is all this about. What are they looking at? What are the projections? John Gachora, welcome to the show.
Thank you, Mr. Chege.
Great to have you here. 18.2 billion profit before tax. Q3 looks good on you. And of course, all the things that I've checked out from your non-funded income, net interest income, all on the positives. I'll be interested to get to know first, as I congratulate you for that performance. What are your quick sentiments and highlights with overall performance this quarter?
Look, we are quite excited about our performance. As you say, 18.2 billion profit before tax, 64% up year over year.
Absolutely.
If you look to the profit after tax, up double, 96%.
Yeah.
Hopefully the highest in the market, I believe.
Absolutely.
Of any bank. So we're quite excited. And as you say, if you look at all our lines, non-funded, funded, very good performance across the lines. We've been very deliberate in working with our customers. It's been a tough year for a lot of customers, and so supporting them has been a call that we made early enough in our strategy, that we're here for good, we're here to support our customers. We've done so, and hence the results that are coming through. Also, I should mention that if you look at our results, our subsidiary contribution has gone up significantly compared to where we were last year.
Okay.
I think at the end of last year, our non-Kenyan subsidiaries contributed a loss of 1.5 billion shillings. If you look at today for Q3, year to date, our subsidiary contribution outside Kenya, it's pretty much, it's a loss of 100 million, which is pretty much even. So a positive swing from where we were this time last year. Very big positive swing.
I had you speak at length about it, and you're about halfway your strategic cycle and now on full gear implementation from what you said on your sentiments. And I have seen, I think as I was driving past Karatina last year, I was very happy to see the branch there. That tells you I'm a customer, and so I just popped in there and I was feeling very much at home. So you're expanding, and 17 branches since implementation, as you said in the conversation. So over the last 2 years has been quite incredible. What is the rationale for this expansion, and how are the branches performing?
Yeah, so we spend a lot of time with customers, asking them what makes them want to bank with the bank. And what we did was carry a survey in 2019, a very in-depth survey with customers, prospective customers, to ask them what are the key considerations you go through to open a bank account. And top of the line was, do I know where the branch is? And it makes sense. Somebody in Karatina who has never seen a branch of NCBA will not call us and say, I know you have a branch in Nairobi, I want to open an account. So it is for that reason that we decided that because we want to bank all Kenyans, we need to be closer to them. So we have this mantra that at the end of the day, we want to be a walking distance from your wallet. Now, it's true that customers, once they open an account, they may never visit us. We have some of the most sophisticated digital channels and mobile channels. And that is to allow customers to bank at their convenience. But the fact of the matter is, Kenyans always think when things go wrong, I need to know where to go. I can face a human being and tell them this damn thing is
the
not
human touch.
The human touch. And that is why we're opening branches. But also I should say that what we have done is maybe change the structure and look of our branches. So that whereas traditionally branches were seen as service centers, we're now opening more as sales centers. So we have more salespeople at every branch to bring new customers, because as I say, once they come, we onboard them on our channels, on our mobile channels. They never need to visit our branch again. So that's the change that we have made. So you see fewer tellers, tellers at a branch, but more salespeople and more sales space. That's what we're creating. In terms of performance, we open our branches with a plan to turn them positive after 2 years. So it's a 24-month projection. We are not into 24 months with any of our branches, but already we have 3 of them that have turned positive way ahead of schedule. We have about 5 or 6 that we believe by the end of the year they'll be positive. So we are meeting. I think we are meeting the targets that we set for ourselves. Lastly, I would say is that part of the reason we decided to grow our branches was that we also need to change the mix of our deposits.
Yeah.
Yeah. What you see in Kenya is, except for the old banks, old traditional banks, and maybe the very large banks, the mixture between what we call term deposits and what we call CASA, current account and savings, tends to be somewhere around 50-50. And to change that ratio is quite difficult. So part of the reason we're doing what we're doing is to try to change this ratio. And we've already seen, looking at the deposits that we're getting through those branches, about 75% of our deposits are CASA. So already we can see they're contributing to a change in our mix ratio.
Wow. And well done on that, by the way. Let's talk about what I want to call the big sector in what I am seeing, first of all, especially on the digital lending portfolio.
Yes.
Quite impressive, quite significant, especially in Marta's short-term lending markets. I'm talking about M-Shwari and Fuliza.
Yes.
First of all, let me just let the viewers get to know the numbers. Q1, 310 billion, Q2, 423 billion, and Q3, 521. Yes. I'm keen to ask, I thought, after your announcement on the reducing of rates, probably there could not be such a significant number, but I'm seeing it still rising. What's driving this?
So after we announced the reduction in pricing, as you recall, we announced reduction in daily rates for Fuliza.
Absolutely.
But we also announced that for the first 3 days, we don't charge you anything. Because you see, Fuliza was founded to be an overdraft.
Yeah.
We're bringing overdrafts to the common mwananchi. Overdrafts were reserved for the rich.
Yeah.
We're bringing it to the common mwananchi. It was supposed to resolve that little mile. You're paying for bread.
Yeah.
Bread is 100 shillings. You have, you
90.
90. You need 10.
But 10
yeah? Are you going to call at home to tell them, please send me 10? That was we were trying to resolve. But the idea was that as soon as you buy that bread, you go back and find the 10 and you put it back and you complete your transaction.
Yeah.
So it was a methodology to ensure transactions don't fail.
Wow.
That was the idea.
Yeah.
Obviously, people have started to use it beyond that. Yeah, people realize you have school fees to pay, so you can buy yourself a couple of weeks. Yeah, so you use Fuliza to do that. So what we announced was really to bring it back to the original use by saying for the first 3 days it will be free, because we wanted you to use it for those first 3 days. It wasn't supposed to be for the next 2 weeks.
Yeah.
It was supposed to be for those first 3 days. Once we did that, I think Kenyans are very smart, as you know, very financially savvy. And once they realize that really they can use this facility for what it was intended for, since that announcement that we did in September, we have seen 14% growth in utilization of Fuliza. So that number there, 521 digital loans as of end of Q3. We expect that number to grow significantly by the time we announce at the end of the year. And that tells me that structured correctly, structured right, Kenya's financial inclusion agenda is not complete yet, which is why I really support what the government is trying also to do with this financial inclusion fund. Because it means that we have not been able to satisfy the need for credit in this market.
Wow. Let me just stick to the digital lending portfolio. You're on record that the bank is in the process of forming a separate fintech company to host its digital loans platform in Kenya and others in your subsidiaries as well. I would want to know, what is the status? Is it an acceleration or diversification of revenue that you're looking at? If you could mention on that.
Sure. So we announced that we want to take our digital assets, which people know M-Shwari, people know Fuliza, people know Loop, people know Stawi that we had started, and a few others, to package them into a fintech for a number of reasons. One is because we want to expand in a number of countries. And the regime that governs how banks expand and how they get licensed is very different from what governs fintech's expansion. So this is agility of expansion. So that's one. I think the second thing, which is also quite important, is agility of process. How you develop processes, how you bring them to market, again, is different. Again, the licensing regime for that is different. And there are some things you want to try and don't necessarily require a license. As a bank, you cannot try with a customer anything that's not licensed. So again, having a fintech, you have a bit more room to do experiments before you get all the license that you require. So I would say that is one. The second one is better allocation of capital. And for that, what do I mean? When a fintech is within the bank, we look at it in terms of allocation of capital, how we look at traditional banking. it's not the same thing. So this will allow us to see fintech for what it is, allocate capital and investments in a way that is akin to how the fintechs are operating. I would say lastly, and quite important, is that fintechs have a certain way of valuation that's not the same as traditional banks. We believe that when you hide those assets within a traditional bank, they get valued as though you're a traditional bank. And so us to move it there is to give better valuation, to better view, and therefore better valuation of those assets to our shareholders.
Wow. Let's get back to the numbers, and I'm keen because when I looked at your non-funded income, I think it has the highest short because it had a 40% up. That's quite significant, 22.5 billion. And I just looked keenly inward and I noticed, and today you have alluded to it when you say that you're now the biggest provider of FX in the market.
It
seems like there's a new trajectory, or there's an opportunity there already that I'm seeing, because there was quite a huge, significant uptick there and counted big time to the non-funded income. Any comments on that?
Sure. I think, as you say, you'll see that we had very good performance on non-funded income.
Absolutely.
We've always had very good non-funded income as a bank. But I think this year particularly, as you say, the performance on our FX portfolio has been fantastic. We reported 9.2 billion contribution from FX. I believe that's the highest in the market. And that really, it corresponds to the amount of volume we put in the market in terms of FX. Hence my point about the biggest provider of FX in this market. And I say for really one reason, and one reason only, is that we are strong believers that being a Kenyan bank, wholly owned by Kenyans, we will support this economy every time that we get an opportunity to. And therefore, we have taken a lot of risks to provide FX to ensure that as a country we continue to provide fuel, to import fuel. As a country we continue to have manufacturing working. We continue to bring edible oils and other things that we need for nutrition. And that is why we've continued to be very active in the FX market. That we provide, one, because of the quality of customers that we have, that we're able to get FX from our customers. The quality of arrangements that were made with certain customers to give us FX. But also because we take quite a bit of risk on our own book, given access to the balance sheet. We can take larger, what is called net open positions, or uncovered exposure on dollar, to give dollars to our customers, to give access to dollars for our customers. And that's what we have done, and we'll continue to support the economy.
Keep up doing that. The president is quite vocal, especially in matters reforms in the country's credit market. I think he is on record saying he invited himself into your event the other day when you were making the significant announcements, especially on the defaulters and blacklisting at CRB, and asking for a better way of looking at it, the grading method that will spare a shutdown of these defaulters from the financial system. I'm keen to ask you, what is the update on the mechanism set to be put in place to repair the credit histories of these listed customers, since you are the lead on the digital pathway?
Well, let me first say, I thank the president for gracing our occasion. It was really a pleasant surprise that he agreed to be part of that announcement. And the reason I say that isn't just because he is the president, and that is important. It's also because I think building the economy is a responsibility of all of us. And our view is that what we do with Fuliza, what we do with M-Shwari, lending that to millions of Kenyans who wake up in the morning to go buy potatoes and go sell, and then repay that loan by the end of the day. What we did to that tailor that needs materials or is out of thread and needs to buy thread now so as to finish making their suit or your suit. That work that we do is very important for the economy, for the MSMEs in this market. So having the president grace the occasion really speaks to the fact that this is an emergency for everybody to support MSMEs. So it was a very pleasant and welcome surprise. During that time, as you say, one of the announcements we made was that we will work, thanks again to initiatives, some driven by the president, we'll work on a way to repair, to help customers who had been negatively listed to repair their credit. And working with our regulators, the Central Bank, and a number of other banks and partners like Safaricom, we came up with a methodology that was announced by the CBK about how we'll help these customers repair their credit. And the process is really simple. It is to say, first of all, we will list you positively.
Okay.
So when you hear people talk about delisting, it's not take a rubber and erase a name, yeah? It's not take a rubber and erase a name, as we know,
okay.
or an eraser erase a name. It's actually giving a positive list. So reset the loan and report that it's actually positive. There's time to repay that loan.
Yeah.
That resetting of the loan, then you say you have 6 months
to
repay this loan, and we'll give you discounts. For you to be able to repay this loan, which was a 50% discount that was announced.
Yeah.
And that process for us has already started.
Yeah.
As we announced, we have already delisted, in quotation marks, or positively listed 5 million customers that we had negatively listed, who borrowed through our channels, either Surely, Fuliza, or others that we had. And now we're communicating to those customers on the process to make their payments that they need to make so that they are permanently positively listed, as opposed to returning after 6 months into negative listing.
Okay. So speaking of the credit repair framework from the CBK, that 50%, I was curious to ask you, are you afraid? What are you looking at in terms of how will this hit you? Because, there's no free lunch, but now we are talking about some guys there are going to go down with some 50% saying, hey, you're released.
Yeah. I think from a financial perspective, I'm not afraid at all.
Okay.
Because remember, these are customers who are not paying anyway. So if they came and paid 50%,
it's better.
It's better than nothing, right? So actually, it's a very positive thing, and we support it because it's positive financially. But that was not the idea, and that was not the drive.
Okay.
The idea was that when you have that number of customers negatively listed, they're locked out quite a bit in the financial inclusion agenda, which we want to promote, and which we drive. And if that is the case, moving these customers from being negatively listed and being locked out into financial inclusion agenda, into other things where you're required to have a positive credit list before you get certain things, even some jobs they'll ask you for. Having those customers then move to this side where they can benefit from those social offers that we have, or work offers that we have, or financial inclusion offers that the government has and we have. It's a very positive thing. So for us, we look at it that way.
Okay.
It's a very, very positive thing. I think the part I would say, the fear that I would say we all have is that Kenyans, we have come to expect that things will be extended. We'll have additional time. I want to assure Kenyans that this is a one-time window. Yeah. If you don't repair your credit during this time window, there's no other opportunity. Okay. Take full advantage of it.
You better hear that. I think they have gotten note of that. Let's move into your numbers again, but you're doing so well, especially on your NPLs. And I'm keen to understand why, because I have just seen, compared to actually Equity and KCB, who are your market players as well, you're leading when it comes to these matters. What are you doing right?
So I think there are a number of things.
Okay.
One was that, our NPLs has to be, you can't look at it as a standalone number. Today's number, I think you have to look at it as a trend number, where we were in 2020 and where we are today. In 2020, we were probably the highest. I think we reported an NPL ratio of as high as 17%.
Absolutely.
And we have come down to today's number of 13.2, which is lower than the 13.7 that you see in the market. So it's a trend, but it's a trend that has required a lot of work that we'll continue to work at. Okay. And that work has been a lot of resolution, working with customers to resolve their issues. Either we agree, let's recover the collateral that you have, or let's restructure your loan, reset it. And they have shown performance. Absolutely. And once you show performance for a period of time, then you're moved back into performance. So those are some of the things that we have done very well.
Wow. We could go on and on and on because there's a lot of sectors we could touch on. But let me now touch on your end, because you are the current chair at the Kenya Bankers Association, which is quite a big seat to sit on. And, a lot of SMEs would want to know, What is the driving force that you have, especially in the macro environment and even the micro, especially for the SMEs, in terms of supporting them to unlock more credit? It would be important to hear from your end whether there's anything they're offering.
Yes. So I think a number of things.
Yeah.
And this is something we discuss a lot as banks, and obviously it's something that is very close to our regulator as well. So we discuss quite a bit about how do we support SMEs.
Yeah.
And as you recall, last year we worked with government to come up with a credit guarantee for SMEs, where we are lending to SMEs. And the last check I did, we are lent to SMEs, not just us as banks, SMEs across in every country in this country. We have lent to SMEs those credit guaranteed loans and working with government to do so. Yeah. And that was a project that we worked together. Many banks have come up with innovations, digital innovations to support these SMEs, and that's something else that we talk about quite a bit. I think the risk-based pricing was developed as a way to ensure that we don't overly penalize SMEs and small business in terms of pricing, was to say, please understand the credit risk that you face a lot better. Because in this country, what happens is that large corporates are able to get really good rates. However, SMEs, unfortunately, are treated as if they're, they're very risky. And so the risk-based pricing model was supposed to accommodate those SMEs so they don't get heavily penalized at the expense, so that they're subsidizing these large corporates.
Finally, sir, I know because time is not on our end, what's on your crystal ball, especially regionally thinking, back to now the bank, regionally thinking, and now you're in the last quarter now.
Yes.
What are you seeing in the offering?
Look, I think I talked about inflation, cost of living. I talked about all the downsides that we see. But there are a lot of positives. One is change of government here in Kenya. That was very smooth. I think Kenya continuing to play a more significant role in regional matters. I think we have seen the former president in Ethiopia, in DRC. We've seen our own president sending KDF into DRC. Just the role that Kenya is playing is getting bigger and bigger in the region. That bodes well for business.
Absolutely.
Because these countries, the moment they are stable, they're export markets for our country. So again, I think quite exciting. The actions that the central bank has taken, both Kenya, Uganda, Rwanda, Tanzania, where they are tightening monetary supply or using physical means to ensure that they contain cost of living and inflation, I see those coming through towards the half to the second half of next year. And again, those bode well for the stability of the economy. And lastly, I think what the US, the UK and others are doing, US especially, where the dollar has been strengthening for quite some time, but now it's starting to weaken and the inflation is starting to come down, again speaks well to the fact that we may see the dollar scarcity start to ebb. And as that happens, then we'll be able to, those FX numbers that we're making will disappear. However, at least businesses will be able to perform the way they should. So I see a lot of balls, not just one, many balls, but if you put them all together, what we are looking at for next year, because we are going through our planning season now, we remain quite bullish, at least for NCBA.
I know it's it finally. CBR rate is going up. Should borrowers be worried?
They should not be worried. They should be worried because it's one gets worried if they look at something only from their corner. But if you look at it wholesomely, the CBR is going up. It needs to be transmitted into the market. So that's where the borrowers may get hit because rates will go up, and rates have already started going up. Rates will go up. But what will happen is that then they will control inflation, and the cost of living, on the other hand, will come down. So you may pay a bit more to the bank, but pay a bit less to buy unga.
That's an interesting way of almost ending this conversation because I can't end without talking about your share. I mean, I've just gotten information because I asked, and your share capital has been, your share value has been growing. I think early in the year, I'm told you were at the ranges of 24, now you're playing around 31, 32. You have to tell the shareholders, what's the good news?
I think, look, we have always said that share pricing
yes.
responds to returns, responds to performance.
Absolutely.
I think, as you started by saying, our
yes.
performance has been very strong.
Yeah.
And net profit double year over year. I think very, very strong performance. And that really speaks to the fact that we, at the end of the day, realize we work for shareholders. We must deliver to them as employees, as a board. Our conversation about what are we delivering to shareholders. We give very healthy dividends that we have done before.
Yeah.
And I think last time you all asked me about dividends, I said we will demonstrate that our view is that if we cannot find somewhere else to invest for the same returns that we're getting, we will give that money to shareholders and tell them you're probably better at investing your money than we are because you haven't come up with a strategy to invest your money. So we'll continue to give her the dividends unless, of course, the opportunities to make those investments. And I think that is what the share price is responding to.
Wow. John Gachora, thank you so much for your time.
Thank you very much.
Just remember, last time I was in the office, I couldn't shake your hand because COVID was
it was COVID, huh? We had to do it together from Mugu,
All right, there you have it, John Gachora, MD at NCBA Group, really unpacking for us the numbers at Q3. And of course, they deserve a pat in the back, looking at how the environment has been. And we want to really push them harder and tell them, you know what, as shareholders, I know you are asking, let's keep going, of course. And we want to appreciate the work that they have done. That has been our time here at the Trading Bell. We want to leave you right now with the markets.